If you are not making money as a trader or losing money, then definitely you are missing this most important information that every trader knows who are consistently profitable. Market is moved by smart money, and there's a lot of misinformation out there, I know. I'm gonna simply explain in this video how smart money is moving the market and how as a retail trader you can use this information to trade like a bank. This is the most valuable information you'll find out there, so make sure that you stick till the end. I'm gonna explain step by step how to identify smart money area and also how they are trading the market so that you can trade like the smart money and pull out the profit like smart money is doing every day. So before I begin this very valuable lessons, guys, make sure you smash the like button and also hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. So first of all, let me explain this simple diagram that you can see over and over in the market. So this is a bullish diagram. If it is a bearish market, you have to think the other way around. So what do we see? That you can see a market is falling. Okay, this is the language of the market, creating series of lower high and lower low. Okay, downtrend. Now a trend will never go in one direction. At some point you will see that the trend changes its direction. So what you have seen that with the change of direction, the trend has formed a double bottom, which every trader understand, very simple. And then at some point, double bottom or any kind of consolidation, the price has broken out of that double bottom, leaving a neckline. Okay, this is the most important part that you need to understand, that this is the neckline of that double bottom formation, which is in fact, this is a very important zone which acted here previously as a supply area or the liquidity area. Now liquidity is the most important word that a trader need to know, because liquidity is the life of the market, is the fuel. The market moves based on liquidity, and as you have seen all the time I talk about it. Now from that liquidity zone, the market has broken to the upside, leaving a clear supply area. After break of this supply area, again the market has come down to test that supply area as a demand area. And that supply area turn into a demand area, and this is where the first smart money place their order. This is the order block, because once a market changes its trend, its value changes. We saw that in the past everyone was interested to sell this market from this zone. Now once we saw that that level is broken and hold the same level, now interested as a demand. So this is the freshly created level of demand, and this is where the smart money started to buy. And this is how you can identify the zone of liquidity and the smart money. And now smart money cannot buy or sell in like we do one lot, two lot or 0.1 lot. They need to do it by block by block. So what they do is, let's say they need to invest in this market $100 million. Okay, now to invest $100 million as an example, they cannot place all this order at one place. The market will fly like the rocket, because once the buy, there the market moves, and they're the real market mover. What they do, they place, let's say, $10 million as an example, starting from here, or maybe $50 million, starting with that, the market goes up, because whenever buyers buying more than selling, the market moves in the upward direction. If sellers sell, the market drops. Now after going certain level with that $50 million, let's say the market moved to this zone here. This is another level that the market reached. Now they have started to take profit along with the retail trader. Now once they take profit, the market come for a pullback. Now this pullback, this leg, smaller leg, is what we call a retracement or a pullback. Now this pullback is a profit taking of this move. Now next, what they do, once the market has come to another level with the previous level, they are interested, people are interested to sell. Now they turn into a buy zone, and this is where they again place another block of order. But as you know that once the market progress, there is once they buy, the price become again another high, create a new higher high. Now at some point when the market is here, for example, this is a basic market structure, the price became too high for them to buy further, because it's all about supply and demand. If the price become too high, it is not profitable for them buy with that high price, and they started to take profit more and more. Okay, let's say the market has come here after they take profit. Is still this market is not good for the smart money to buy. Try to understand, they need a bit more lower price to buy again. Now how do you do that? Because everyone is smart, right? As a trader, retail trader, you are smart, I'm smart, everyone knows that smart money is buying here, I'm gonna buy. Now once everyone is turning to a buyer in the market, they need seller in the market, because there has to be a transaction between buyers and seller. Let's say you wanna buy an iPhone or any kind of mobile phone that you wanna have. You need a seller, someone need to sell it. Now if there is everyone is a buyer, who will be seller? They need seller. How do they get seller? They manipulate the market. Let's sell, let's say $5 million as an example. Why? Because they know that everyone bought from here, because it's an uptrending market and their stop loss is here, their take profit is here. Now they know that everyone is buyer here, but everyone is seller here. How does it work? The way it works is that once you buy a market, your stop loss is a sell order. I'm repeating again, once you buy a market, your stop loss is a sell order, and that sell order, once it is triggered, you hit the stop loss, and then that sell order turn them to buy, and the market move again, skyrocket. So where does the smart money is buying? Most of the retail trader is buying here. Okay, this is not a smart money zone. This is why retail trader lose money. This is why you are losing money as a trader, because you are following the conventional education as a trader. So this is where everyone is buying, but the smart money is buying here, and this is the smart money zone, and this is the information that one must know to be a consistently profitable trader. And as you can see that these things is being repeated over and over again, and that's how the market moves. This is the simplest way to understand how the market moves, and once you know that, I'm sure that you can gain huge advantage as a trader. So now let's look at the real chart to show you real trades that really works this concept so that you can use it straight away in your trading. Okay, so let's look at this example. This is a perfect example to look at. This is also a trade that we have closed with incredibly 2.5 reward to risk ratio profit in our forex trading wizard academy. So as you can see, the market was heading here on this local downtrend. The price has created series of lower high and lower low, and then what it did, it formed a double bottom and then strongly has broken to the upside with this huge impulsive move. Now with that impulsive move, we see the market has formed this important neckline of this previous resistance, which is turning support here. This is the smart money zone that we are talking about. The smart money bought from here. Now if you look at this individual candlestick pattern, you know very well that where the smart money bought in this market. This is a very simple just way to understand where the liquidity. Now how do you know that? You can see that trading requires patience, and you know that this is where the doji and most retail trader will be interested to buy with the doji, because in a conventional education of trading, everyone will think, okay, there is an impulse correction and that correction has made well enough, there is a doji, that means that there is exhaustion and the buyers ready to buy, and this is where everyone is going to be impatient, going long, stop loss below this low and probably take profit 3 to 1, 4 to 1 risk to reward ratio, and just to see that in fact the market has come and hit you to stop loss and then has gone straight to your profit target. Now what is the difference than knowing the smart money concept? Once you know the smart money concept, you know that where the smart money started to buy, because this is with this doji where the retail trader buys. This is where with this the smart money buy, and this is where we also bought in our forex trading wizard academy, and this is where the market has grabbed the liquidity that it needs, the fuel, and then aggressively has gone up to hit the profit target. And this is how the smart money trades. And as you can see, after that, after grabbing liquidity, the market has moved aggressively to the upside exactly you need, and it was a huge move, as you can see from the zone, full spectrum to the upside. And that's how the smart money buys and sells in the market. Now let me show you some more examples to clarify this concept of smart money so that you are fully equipped as soon as you finish this video. Okay traders, so let's see this example on gold on 15 minutes chart. Now keep in mind that smart money concept applied to any time frame, 5 minutes, 15 minutes, 1 hour, 4 hour, no matter. So what do you see that in this chart? See if you can find the pattern that we have just drawn. The price has reversed from here. So if you draw this reversal pattern, okay, we can see this reversal very clearly, created this move, exactly has come to the neckline, and the price is creating series of higher high and higher low. That's up to here. This is what exactly we can see as per the diagram that we have drawn. So now if we look at that diagram, what we see that this is the order block, the previous order block, previous resistance here, turn support here, and we saw that from that level the market started to move, impulse correction, impulse correction. The market is creating series of higher high and the higher low, the market moving exactly according to the market structure. Now what happened is that where there's the retail trader buying and selling, now let me show you where again smart money will place a big order. Now you can see that when this bullish engulfer is formed, you can see this is an uptrending market creating series of higher high impulse correction, very clearly defined uptrending market structure. Now retail trader will think that okay, the market is moving to the upside in this channel, in this trend, creating series of higher high and higher low, and the market has formed a bullish engulfer. Very simple, I'm gonna buy from here, a stop loss below this low, take profit 3 to 1 or 2 to 1 risk to reward ratio, and probably you think that it's a good trade. In fact, now what happened next? Look, the market has gone up little bit and then has come back down exactly and then hit your stop loss, and then as soon as the market hit your stop loss, the market started to move exactly in the same direction. Now you can see this candle here. This is the most important point here to look at, is that this candle is a smart money candle, and this is where the market exactly has broken this previous candle's low, where there is a huge liquidity. Well, this is the support here and support here, and the liquidity is here. Now once you saw the market has grabbed the liquidity, that is where, when the smart money saw that the retail trader is buying, everyone is buying, then they manipulate the market to come to the zone where there is a huge liquidity. Now once the market started to move from that zone, this is where the huge liquidity involved in it, and from that zone that the market started to move in the direction, and as you can see afterwards what we have seen, there is a huge movement happen to the upside. So this is how the smart money trades. And as a retail trader, when a trader knows this secret, knows how to trade with the smart money, one gain incredible advantage over the market. I sincerely believe that this important lesson was helpful to you. If you find value in it, then don't forget to subscribe to the channel, and also don't hesitate to check the website link in the description area, and also you can see a link on the screen. Join us to learn more this kind of concept that will change your trading career completely. Thank you very much, and I'll see you soon in my next lesson.